All right, everyone. I'm making this video because I want to go ahead and make a lot of investors aware of the shift in the market. So I know I usually say a whole bunch of things at the beginning of the video. Hey guys, welcome, welcome, welcome. Thank you so much for watching. Hit the like button. Don't forget to subscribe. Da, 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 da. I'm not going to talk about that right now. I want to just jump straight to the point. And if you find value in everything that I share, just share this with a friend. And yeah, don't forget to hit the like button. I still said it. But don't forget to. I really appreciate that. It really helps out the channel. But I want us to be aware. Because right now, the S&P 500 index is going up so fast, yet your portfolio is in the same place. I want you to comment down below. Is your portfolio red, or are most of your stocks red? Have some of your stocks fully recovered from this big drop, or is it a big joke? Because as we went up and we pulled back down, your stocks right now have only recovered a few cents. If you're in penny stocks, or if you're in growth stocks, tech stocks, or innovative stocks. I want you guys to comment down below, because that's going to let us know how many of us are in the same boat. And I want you guys to be aware that when you're in this boat, it's because of a reason. And this is all the explanation that comes with this video, the reason. Okay. Now, if you guys want to know what ticker symbols to watch out for, receive live updates. I do weekly updates on stocks that have potential to grow. And there's not like instant gratification. It's actually stocks that you need to do your due diligence and research, but they are proven to have the opportunity to grow based off of analysis ratings. The charts are showing opportunity. If you want to know more about that, you can join me over at the Patreon. The link will be down below in the description, and I'll also pin it down in the comments section. But I want you guys to be aware that things have changed, okay? Whatever strategies you were using last year to this year, it's not going to work. You might even lose all of your gains if you don't do things strategically right, okay? I've been in the market for a total of 9 years, 4.5 outside of the market, and I was actually learning about the market as much as I could. I wanted to learn charts. I wanted to learn the market, the terms, everything. Now, 5 years actively trading, and I still consider myself fresh and new. I still don't know anything. There's so much to learn. So, let's jump into this. So your portfolio most likely is red, or a little bit down, or haven't fully recovered because of the fact that the S&P has nothing to do with your portfolio. And the S&P is the Fortune 500 companies. So the S&P might continue to go higher, and your stocks are not going to follow the direction of the S&P. I have to tell you guys that. And I do want you guys to be aware of that. Before, the S&P 500 was actually bringing up with it the whole entire market. So when it ran up, penny stocks, all these other stocks, growth stocks, innovative stocks were pushing up with it, right? Now, complete opposite. Things have actually come to a detachment. This is the first time I see this detachment in over 1.5 years, almost 2 years, okay? Once that detachment starts, yeah, penny stocks are penny stocks, growth stocks are growth stocks, and tech stocks are tech stocks. Innovation is innovation, but the S&P will be the S&P. And the S&P will always rise at some point, okay? It will never fall behind these penny stocks or growth stocks. Those growth stocks and tech stocks might outperform the S&P 500 index at some point in the year, but it won't outperform it when it comes to the history of the S&P. Because let's go ahead and zoom this out so you can see. There is no stock that'll be able to outperform this. There's actually stocks that move with this, and I'm about to pull those up so you can see what is going on here. So remember this graph here, and I want you to remember this right here, 25th till now, okay? So let's do this. So the first thing I want to share with you guys is Cisco Systems. Okay, Cisco on the 25th, it dipped a little bit, ran up. Okay, it's ran up. Look at that. The same exact thing that's going on to the S&P 500 index. Forget about the past. Just right here. Okay, Cisco Systems. Boom. Back since the 18th, there was a dip. It's been running since, but this was that dip I want you to see and the run. That's one of them. This is billionaires and millionaires, not safe haven, but one of their favorite stocks over time because the dividends and it grows over time. And it does. Now, the other one is waste management. And I want you guys to see this here. This is very interesting. So right here, you could see the dip on the 18th. The 25th, it barely even got hit. It's running. Same thing. 18th, it's been running since. 25th, a little dip. It's running. S&P, dip. It's running. Okay. Now, the other one is Union Pacific, actually. I want you guys to see. So, Union Pacific actually mimics it the most, right? It was pretty close to it. The 25th's right here. But it fell on the 22nd, even on the 18th and the 5th. You can see these different falls there. But it mimics it the most exact. Look at that dip. Look at that run. S&P 500, dip, and run. Then we got the 18th and 19th. It dipped as well. And then back to the 4th and the 5th. You could see that mimicking those moments, right? And then a little bit on the 22nd. It's been running since. The 25th, dip, and run. And then the last one is Costco. And there's many more, but I just want you guys to see some of these strong stocks. So the 18th, the 5th, 25th, 24th, and slight dip and run. Now this one's moving a little bit more different. It's been running pretty strong since the 19th and even down here since the 5th, but it's been running. So why are these stocks running? Well, these are the stocks that have been known to outperform when it comes to their market cap, outperform in EPS, and also they're profitable. Okay, their net income is a real thing. Okay, they have income that's profitable, sometimes better than others, and this will matter. If you never paid attention to quarters, earnings, and market cap and valuation, the valuations. Oh my gosh. The valuations of these companies, it's time to do so because the market is coming back to its regular performance and its regular way of doing things. And you could see how earnings here was negative and it's actually running in the expectations that the next earnings will possibly be beat, right? Next earnings estimate is actually a little bit lower. If it gets beat, this is running towards that earnings. It's coming in May. And it might actually beat it. And if it doesn't, we might see this stock pull back down. That's what's the market all about. That's what it's always been about. And that's where you need to really start thinking about this stuff. And here on Yahoo, you could see here, and that's what I want you guys to see. Remember the S&P 500 index when I zoomed out? Look at that same trajectory, right? Same trajectory. That long-term growth in the last 40 years. If we pick up waste management, same thing. When you put the max, it has a mimicking effect. It's been going upwards. It had a dip here in 2000, but since then it's just been running. It's been going upwards, the same direction that the S&P goes. And then when we look up Union Pacific, same mimicking effect. In the last 40 years, it's just been going upwards and growing over time. These are the stocks that actually hold up the whole entire economy. I want you guys to be aware of that. And these valuations, these PE ratios, they matter, okay? EPS, that matters, okay? That's called earnings per share, okay? That's what you earn per share according to the growth of the company because of the fact that the company has actually beat its earnings and that revenue and net profit then goes into shareholders' hands. That's the way the market really works. If you're in companies that aren't profitable, you're at a really, really high risk. Risk is all over the market, but it gets higher. And then the last one I want to share with you guys here is Cisco, which I showed you guys. And when you put the max, this has been a little bit more volatile. It ran up, it fell down, and it's just been growing since. And I think it's going to continue that pattern, especially with that good PE ratio there. The EPS isn't too strong. It says here near fair value. And then their market cap is pretty strong. But this is a whole different type of stock. It moves a little bit slower, and it doesn't really go much up or down, and actually gets a little risky when it goes downwards. But it's been growing since '05 and even down here since '03. But the point of the matter is things have changed. And if you are in growth stocks and innovative stocks, there's nothing wrong with that. But you're not going to get the fruits of your investment maybe 5 to 10 years out from now. I want you guys to be aware of that. Look how long it took for Cisco to go from $16 to $52. Think about that. Okay? I want you to also see here how long it took for Costco to go ahead and get where it's at today. Let's go ahead and put the max here. So back in '09, it was at $46 to get to $352. Think about that. And then when you put here, waste management, look how slow this moves. I mean, this is one of the slowest movers. But since 2000, it was at 15. And then also here at '09, it was like at 30s all the way till 12. And since then, it's been going upwards, and it's now at 129. And then Union Pacific, right? You don't want to think about before 2000 because that's such a far stretch back here, and like valuations were different back then, and but right here in '08 and even right here in '11, from '08 to '11, it took 3 years to double, and from there on out it's been growing, right? And it had a big dip in '16. You would have gotten fearful there, right? But if you believe in the company, you add more, you hold, and look where it's at now. And it's like tripled since '16, but it took almost 6-7 years. So I need you guys to be aware that the stock market has changed, and you need to change with it. And if you haven't learned the stock market, I'm telling you guys, I'm going to start doing a series of videos to help people understand the market better and perform better. I'm not saying that these growth stocks, it's over for them, but you want to be aware of the shift. And if you aren't, you need to prepare for it. And you want to be able to handle both types of markets so that you are an investor that can maximize profits and minimize losses. But I do want you guys to know that in this market, do not expect instant gratification. And sometimes you're going to be buying stocks when it doesn't even make sense. And a lot of people don't even realize that the market we were in last year, it made even less sense, worse sense. But people were still buying at stock prices that were ridiculous high. But that's all about learning, and I hope that you guys learn from my videos. You can join us over at the Patreon. I'm going to have the link down below for the stocks that I watch weekly that have potential. But I want you guys to know it's not hype stocks or anything, but all it is about is my goal is to maximize profits and minimize losses. I will share with you guys what attracted me to the stock, and I am going to start a series over at the Patreon that I don't want you guys to miss out on, and you'll be able to upgrade to it if you're interested, where every week I'm going to teach you guys, different terminology, different things about the charts, the psychology of the stock market, and how to become a better trader, all well-versed and diverse, okay? So if you guys are interested, you can go ahead and join us, and thank you guys so much for watching, and let's make some money.